These were the trades I took using the liquidity inducement theorem this week and passed my 600k in challenges. And I saw many smart money traders and ICT traders took random losses here because they don't aware of the fact of the liquidity cycle. And also 99% of the traders who are trading the markets don't even aware of the liquidity cycles and market cycles. And also they don't know at which phase the market is currently in the liquidity cycle and end up making a lot of unnecessary and silly losses in the marketplace. So in this video, I will exactly explain what is liquidity cycle and different types of liquidity cycle. If you can understand this liquidity cycle, you can take the sniper entries like this, you will end up avoiding all the unnecessary losses and your equity curve will look like this, small losses and big wins like this. So you will become the top 1% trader, clearly understand what is the liquidity cycle. So make sure watch the video till the end. Liquidity cycle is the pattern used by the market makers in order to move the price. The market maker, in order to move the price, they need liquidity. So that's why they will accumulate the liquidity, create the fake chart patterns and induce them, and it will move the price. So this is how the market makers move the price. There are three phases in the liquidity cycle is there: accumulation, manipulation and distribution. First they will accumulate the orders and they will manipulate it, take all the liquidity, because here lot of retailers will have lot of liquidity here, lot of liquidity here, lot of liquidity here. All the liquidity got collected and it will move because the big players like hedge funds and banks have liquidity problems. They can't execute the orders wherever they want, like retail people. So that's why they need a lot of liquidity to execute their orders. So that's why they will accumulate the liquidity first, fake chart patterns, so that lot of retail will be interested in providing the liquidity. So all the stops are taken out. Now they will sell, because the opposite of the sell orders are buy orders. Now they got all the liquidity, so their orders get executed without the slippage and anything, and it will move in the real direction. So this is the real mechanics of the marketplace. Normal smart money people and ICT don't teach about the market mechanics. I have learned in-depth knowledge about the market makers and how the exchanges work and everything. So this is how they work. First they will accumulate, manipulate and distribute, and also it can happen in any time frame. This can happen in 1 minute time frame or monthly time frame. I can show you a lot of examples in the 1 month time frame and also 1 minute time frame. This cycle is fractal. The time is fractal and the price is fractal. So that's why this AMD cycle, we call it as liquidity cycle or AMD cycle. This happens at any time frame. It's same. They will accumulate first, they will manipulate first, and they will distribute. Now I will show you some different types of the AMD cycles so that you can aware when the market produces them. These are the 4 different types of liquidity cycles in the marketplace. I can guarantee you, if you can master this liquidity cycles, you can avoid all the unnecessary losses and the silly losses from the marketplace, and you can take the sniper entries like me and my community members. So let's deep dive into the each and every liquidity cycle. The first one is smart money trap liquidity cycle. Nowadays lot of traders are smart money traders. They will assume the market will move from the structure. They will think this is the break of the structure and they will think this is the order block. But the market didn't consist of any structure. It just moves from the liquidity pool to the liquidity. Just it moves from the cycles. So they will have lot of buy positions here. I will use another color. They will have lot of buy positions here. Lot of buys, lot of buys, lot of buys. So all the buy stop losses will be here. All the stop losses will be here. What is the opposite side of the buys? Sell positions. So there is a lot of sell positions. The stop losses. The stop losses. Stop losses means nothing but money. So the market maker will just come, take the liquidity and it will go. So this is what happens in the real market. It will just take the liquidity and it will move up. There is nothing like structure or order blocks or nothing. It's just liquidity. This is how the market mechanics. If you deep down into the rabbit hole, this is how the market moves. Move the liquidity and then it will move. Simple. So this is the first type of the smart money trap. And for this first type of smart money trap, this is the accumulation phase. This is the accumulation. This is the manipulation and this is the distribution. This whole move is the distribution first. So let's move into the second important type of the liquidity cycle, that is range liquidity. So in this, the market makers will trap the retail people. So they will print the fake chart pattern. Like they can print whatever they want. They can print whatever they want. So they will print this type of chart pattern to induce the liquidity, to engineer liquidity. We can call it as the engineering liquidity or anything you can. Because what they are doing is they are building up of money. They are building up of money in the both sides of the marketplace. This is very, very important and powerful liquidity pattern in the marketplace. The ranges. So what they will do, they will manipulate in one direction and then they will move in the real direction. Simple. They will distribute the price. Simple. What they are doing, they are building up of orders. So a lot of retailers think this is a strong break of the structure and they will sell here. They will sell here and their stop losses will be here and they will target somewhere around here. They will just do for 1:1. So that's why they will never be profitable in the market. Whereas we are doing 15 hours and 20 hours in a week. So they will hit us sell, all the liquidity got taken out and the price reversed. So this is very important type of the liquidity cycle. Third one is downtrend liquidity cycle and uptrend liquidity cycle. Lot of 99% of the traders in the marketplace will trade the trend line. They will mark some random lines in the chart thinking it's a trend line. So if the price move like this, what they will do is they will mark a line and then they will think if the market broke this line, the market should go like this. They will assume like this and they will have a lot of sell limits here and stop loss around here. So the market maker just exactly knows where the liquidity is. So the liquidity, there will be ton of liquidity around here, lot of liquidity. So what the market maker will do is just take all this liquidity and move in the real direction. This is what happens always. They will take all the liquidity of the trend line and it will move in the real direction. So this is also very important liquidity cycle. So in this liquidity cycle, this is the accumulation phase, this is the manipulation phase. This whole move is the manipulation, down move is the manipulation, and whole up move is the distribution. This is how the market maker change the price from one point to the another point. They can't move the price in a straight line. Also, this is also very important. Uptrend. First, they will accumulate the orders. Like a lot of people will think this is the break of the structure. They will buy here, but market maker will take the liquidity and it will move down. So I will show you number of examples now in the charts by using the liquidity cycle. The first thing when coming into the charts, you should identify the build-up phase in the marketplace where the accumulation is taking. So in this state, there is a lot of accumulation is taking place here. So this is the accumulation phase. So we should wait for the manipulation before taking any trades in the market. So this is where manipulation takes place. So we can take all the buy opportunities when they appear here and target the build up high. So we are capitalizing whole the distribution move, and also you can see a lot of liquidity here. We can target whole the build up high by entering here. So this is how we will get high risk reward ratio. I entered the buy here after the Asian liquidity is taken out with the tightest stop loss and targeted the high. This is how I captured 14% gain in a single day. These are the type of trades you will take day in day out if you understand the liquidity cycles, and you will end up avoiding a lot of unnecessary losses. You just need one funded account to change your life. You just need 100k account to change your life. 14% in your 100k is $14k. You just need one account. If you do hard work and everything, you journal and backtest whatever I am showing you in this video, your life will eventually change. I am receiving tons of messages on a weekly basis by the students from the YouTube. They are watching my YouTube videos and they are changing their lives by just applying the concepts, and they are creating their own strategies by watching my YouTube video. It's possible, guys. It's very easy once you get funded. See here, in this scenario, this is the build up, manipulation, distribution. Simple. Identifying the liquidity cycle is very simple. I hope you can see this huge build up. This huge build up is the accumulation, and this is the huge manipulation. And if any sell setups appeared here, we can eventually sell with the tightest stop loss. You can sell here and you can target the build up low. Where is the build up low? This is whole thing is the build up low. You can target this build up low. This is how you will get crazy risk reward ratios. It's easy, guys. Whereas normal smart money and retail people will take the trades from every liquidity point. They don't know the bigger picture, what's the liquidity cycle is, because we should only focus on the sells, as the higher time frame liquidity cycle is telling the sellers sells are high probable than buys. Simple. You should be aware where the liquidity cycle is going. So this is how you will end up taking lot of high RR trades and high win rate trades. If you can capitalize one of this move, you can easily pass your funded challenges in one trade. In this video, I'm just only talking about this liquidity cycles. If you combine this liquidity cycles with the timing stuff and the entry stuff, it will become like a mastery. Simple, guys. This trading is very simple. This Instagram gurus and everybody is overcomplicating it. You should just need one setup and execute it over and again every month. Then the profits will automatically come. The mindset is very important. Just a sweet reminder, guys. Remember that trading is hard and it takes years to master. For myself, it took me 4 years of lifetime to master this skill, and now I am making life-changing amount of money every month from this trading. So never give up, guys. Make sure you understand. If you want any information or concept related education, watch the videos I posted on the YouTube over and again and practice them. Never give up. You can make life-changing amount of money in the future. Or if you are a type of person who want to fast track their growth and serious about the trading and want to get funded in 90 days, like these people who are making tons of amounts of payouts each and every month consistently and also posting consistently in the group, we have Francisco, who made around $1,269 in a single month, and also Friday, who made $1,500, and also Abanjo, who made $1,200. These are not coming from a magic thing or nothing, because they are under the right guidance and correct mentor. This is the only thing why they are killing the markets every month, because I have spent 5 years refining my strategy over and over and over and again, because I have done 8 hours of backtest daily to make the strategy, and they are taking their first trade by using all the refinements I made over and over and over the 5 years of time. So this is the results after accessing to the liquidity inducement theorem. If you want to become the funded trader in 90 days, and if you want me to one-on-one mentor you and give you the access to the liquidity inducement theorem of 15 GB of private content and review your trade in my journal, which I will give the access to you once you join the group, and also live trade 3x per week, the community, and also lifetime access to the private Discord and video mentorship tab, where the one-on-one recorded videos will be posted. Click the link in the description and join the liquidity inducement theorem mentorship. I am literally so confident with the mentorship, guys, because I have seen number of students who is facing a lot of issues in the consistency of the trading, lack of strategy and psychology. After joining the mentorship, I have seen the huge transformation and huge growth in their trading journey, and after getting funded, I can guarantee you, you will become funded trader in 90 days if you put in the work which I give you, the tasks and everything. And if you are still facing any problems after the 90 days and you are not funded, I will trade live with you every day until you become profitable trader. This much guarantee I can give for the liquidity inducement theorem. I make sure every student in the elite should be profitable. That's the main aim of this liquidity inducement theorem, using the hidden layer of the smart money concepts. Hope you guys enjoyed the video. Make sure you subscribe and like the peace, guys.